Hey, what's up, crypto wizards? Sean here, and we're going to talk about how to make money on the volatility of Bitcoin alone, or on the change of volatility. So here you can see Bitcoin's Volatility Index online. Just go to buybitcoinworldwide.com and there's a Volatility Index. It's really useful because you can see when volatility is low and when volatility is high. When you're looking at the price changes of Bitcoin, you can see it in the price movement as well. I mean, here where Bitcoin has these massive red and green bars, there's obviously a lot of volatility there in the price movement. Now, when that happens and it gets to the end of a move, volatility is going to be high, yet you know that it's unlikely to do another big move. It's probably going to hold for a while, consolidate, work itself out before the next big swings. So based on some speculation, you can make money that way. If you don't want to speculate, you can make money just knowing that volatility is really low or abnormally high. So how do you do that? Well, of course, I'm going to say it's using options. So let's assume we are going to buy a call option right now. So this tool will allow me to see my profit and loss depending on what trade that I place at any given time that I choose. So right now I want to buy a call option, and I'm going to buy it at $8,000 and the strike price of $8,000 too. So I'm assuming Bitcoin's price here, by the way, is $8,000. I know it's not. I'm just rounding it to make this easy. But the expiration date could be December the 29th of the option. Now, let's assume right now that the volatility today is really high. Now, if you go to Deribit, their options exchange has an implied volatility of 95%, meaning the options there are amazingly expensive if you are buying. So let's assume that I'm buying at 95%. And I want to look at this as of the end of today. So I might want to close my positions as at the end of business today. I don't want to wait till December the 29th to close my positions. So I'm going to add that in. Now, when I look at my profit and loss, I make money infinitely as the price of Bitcoin goes up, and I have a fixed loss if the price of Bitcoin goes down. Now, obviously, I don't expect that Bitcoin's price will move by this much in one day. However, you can just see the full spectrum. Let's add now another position. So let's say I want to close out my position. So I'm going to place another position to cancel my first position. Stay with me. So I'm going to now sell a call option, which means someone else has the right to buy Bitcoin from me. Yet it doesn't matter because I have the right to buy Bitcoin from someone else. And it's at the same price. Let's assume the Bitcoin price hasn't moved at all. Remember, I want to show you how you can make money just on the volatility change, no matter what happens with the price. So the same strike price and the same underlying Bitcoin value we're going to put in. And I'm going to put this in for December again, the 29th is the expiry. Now let's assume that the volatility has actually declined. It's actually dropped a bit and it's gone to say, I don't know, 75%. So I'm going to add that position in. Again, look at it as of the end of today and hit exit. Now what's happened here is the volatility when I bought the option was really high. So I bought it an expensive option, because when volatility is high, an option's expensive. For example, if volatility was 150%, the option's $1,500. If it's 20%, it's only $200. So volatility has a huge say in the price I pay for an option. If I'm then going to go and sell this seller call option and volatility is lower, I'm actually fixing in a loss. So even if the price hasn't moved, I'm fixing in a loss. However, let's swap this around now. Let's put in position one where I'm going to buy a call option. So I look at the Bitcoin chart and I've worked out the big move is over. We're probably in a consolidation period now. We've been in a consolidation period and the volatility is really low. So I'm looking at the volatility index, it's really low. So what I want to do is I want to buy a call option, same prices again for argument's sake. Same expiry date, except now the volatility is only 50% because it's been consolidating, it's chilled out, it's relaxed a bit. And I know there's going to be a big move coming up. There are things that are going to come out in the media. Something has to move. There's interest coming into the market. There's a lot of big buy orders being placed. Whatever your theory is, you now know that you want to be buying because the volatility is low. So you're going to add in that position. Now, let's say here in position 2, you're going to sell the call option. So now we're going to sell call option, same prices, etc. But you're going to sell it now when volatility has increased, it's got to say 95%, and you put in that position, now you can see you're fixing in a profit. So if the price moves massively in the day, you actually make money no matter what, no matter how far up or down the price moves. This is amazing, right? So let's look at expiration. Let's go to say the 28th of December and see what would happen there. You can see how, because of the time decay now coming out of the option, you can see how you're fixing in a profit of about $400 to $400 just because you've traded volatility. So no matter where the price is, if you buy it with the same strike and underlying price, so let's say the price stays the same and only volatility changes because price hasn't been moving much, you make money. Now, just remember in the last video, I showed you the Iron Condor, an awesome strategy for high probability trading. And if you trade an Iron Condor, it's based on you really selling options more in the money than the options that you're buying. So they're still out the money, but they're more towards the current value than the options that you buy. Therefore, you make this fixed sort of profit. And you want to be selling those when volatility has been really high. So if you go back, watch the last video, and you've seen big swings like this and volatility that's up here, it's really high, then okay, I'm going to be able to charge a lot for my option because the higher the volatility, the more money I get because I'm selling the option. And therefore, you might want to do the Iron Condors in that sort of scenario, especially because the big moves are over. And you also know that the price is likely to trade within this range here. So for example, if we go back in time to here, I know hindsight's always easier, right? But you see these big moves, volatility's high, the big moves are over. There's not much hype left. The Segway 2X saga is now over. They've made the decision. Things are going to consolidate. You will then place an Iron Condor and you would buy it at volatility being really high because you'll make more profit, and you've also placed the trade knowing the probability is in your favor. Remember that typically it should move within the normal distribution of 1 standard deviation of the price. If you have no idea what I've just said, go back and watch the last video. But anyway, that's how to make money just on volatility change alone with Bitcoin. I hope you found that useful. If you want to see the up and coming videos so you get notified of the videos when I post them, of course, hit subscribe and the little bell and you'll be notified and you'll get all this great knowledge at your fingertips. So anyway, take care and talk soon.